Hi everyone. Today let's talk about the indicators that are showing a flash recession and triggering the sell-off. Then we'll get into all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So let's talk about that recession indicator here. I highly doubt that you missed it, but markets were in free fall early in the week with the unemployment rate hitting 4.3%. That was on the Friday of 2 weeks ago, and now we are talking about the Sahm Rule. This is definitely what you don't want to see. We are seeing that unemployment rate start to trigger, and once we've seen that consistent rally and we get above a 0.5% move, that is when we start to trigger that recession. Lower sales, businesses cutting jobs, and this becomes a vicious cycle and a deteriorating economy. We've talked about the Sahm Rule before on this channel, but now it has been officially triggered with that unemployment rate, and that is what triggered this super aggressive move down that we saw on Monday. Again, I've been talking about it. I think we're going to see another little bit of a push higher, but eventually this downtrend will continue. And they do mention the Sahm Rule has been remarkably accurate. It has accounted for every US recession and only generated one false positive. And by false, they mean it was 6 months too early, and eventually it did come back and be a recession. So definitely interesting, and it is something to keep in the back of your mind. We've been talking about it as the yield curve seems like it's going to get back into normalized conditions, which is yet another indicator of potential economic weakness to come. Moving over to fear and greed, you can see we finished the week at a 24. The previous read was a 27, so we did end up going lower on the week despite markets finishing basically flat. And you can see it here on the timeline, fell really aggressive, bottomed out at a 17, and then we finished here in that 24 range. And you can see momentum still in fear despite the bounce. Strength, this has actually been in greed, and it is now moving back down to neutral. And then breadth has been tapering. Saw a slight bounce on Friday. We'll look at that later on the charts. And then put call ratio continues to rise. I think that's going to get up into this 0.99, potentially up into the 0.1 area. And then volatility did crater, but you can see this trend is stepping higher. I think we're going to see a second spike on that. Just depends on timing as always. And then looking at the bond market, people are buying bonds really aggressively, trying to get out of equities and lock in these yields before we see that first rate cut in September, in my opinion. Moving over to the AAII survey, pretty interesting swing here. We've been hovering in the 44. The bulls are now down at 40. But look at this step up here on the bears. The bears are coming in hot. We did get a very low level at 25 2 weeks ago. And now this week we're at 37, above the historical average. So definitely some bears in there. But the bulls are still hanging out above historical averages. It is the neutral party that is getting squeezed, which is interesting, especially considering that's what we ended up getting on the week. So to me, this still means that we are swinging back towards the bear side. I think the bears are going to continue to push. I think the bulls will continue to swing. You can see a month ago, we were at that critical level, 52, basically at the 1-year high. And now we're seeing this kind of downtrend. We'll hit a critically low level, and then we should see some kind of reversion back towards the more normalized condition. At least that's my thesis over the next few months. Moving over to seasonality, I haven't been talking about this too much because it says election years are supposed to be bullish, and we saw a cratering in markets. Even the normal years, which are slightly bearish, were getting way worse than that already here in August. So we'll see how it plays. Just understand it is a relatively bearish time period during the month of August. And then moving over to the calendar here, you can see Monday up 19 of the last 29. We get PPI and CPI this week, and then a bunch of data here on the Thursday session. But we are supposed to see bullishness on Thursday and Friday, and then we got that options expiration. Pretty early options expiration, but it is technically the third Friday. Moving over to earnings, there are a couple of companies left. You got Home Depot, Cisco, Cardinal Health, Walmart, definitely a big one, Deere and Company, Ross, Tapestry, just a couple of players out there left for this earnings season. Moving over to the economic calendar, basically nothing here on Monday. Federal budget balance, that could be interesting. Core PPI for Tuesday, that'll definitely move markets. And then for Wednesday, GDP for the Eurozone, as well as core and headline CPI. We get another inflation read. Want to see that continue to trend down. You can see expectations are for core to step down to 3.2 and headline to 2.9. But the month over month going from minus 0.1 up to 0.2, and then core as well jumping from 0.1 to 0.2. So we'll see how it plays. Definitely going to influence that September rate cut potential. I think it's pretty much locked in, but data is data and it could be interesting. And then core retail sales here for Thursday, as well as the headline number, both of those coming out at 8:30. Philly Fed Manufacturing Index, also interesting. Want to see that economy continue to stay at least growing slightly like it is right now. And then looking at Friday, Michigan inflation data, a couple of housing data pieces there. Not a whole lot for the Friday session, but quite a bit of data this week overall. Moving over to max pain, this is a third week options expiration, and we are pretty much already at max pain. So 532.86 is current price, 535 is max pain, ton of puts at 520, puts at 530, a little bit at 535 and 540, and that's really the top of the puts. And then you can see calls here, 550, some at 540. So still a lot of puts in the market. To me, that means we're probably not going to see a massive fall next week. Put call ratio all the way up at 3.08. Total options 2.6 million. So lots of options, lots of puts, and this is a relatively bullish read in my opinion. And then looking at the Q's max pain, you can see stock price 450.67, max pain all the way up at 465. So a very bullish read there. Tons of puts at 470. You would assume that we would be able to get above that level for the market close. Total options, 1.6 million. Put call ratio, very different there at 0.99. So put call ratio much, much lower on the Qs, but definitely some big put walls here, 460, 465, and 470. Interesting to see that put wall so high at 470. So we'll see if we get a push above that level, but this is a bullish read. And then the calls here don't kick in really until 475 and 480. You could argue some here at 470 as well, but between 465 and 470 does make sense as a market finish. So overall, quite bullish. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see the week was still technically a little bit bearish, 0.04 to the downside, but look at this momentum, continues to step. That's 4 steps in a row of bearishness. Usually you would expect at least one more week there, which is pretty interesting considering what we saw on max pain. You can see a push down to that 5200 area again, hit that trend line again. We did finish above the 21 EMA, so the weekly trend is still intact on a closing basis, but you can see we did find a little bit of resistance there at the trend line, right where we finished, got the gap fill, touched the trend line right there at 53.55, and then for the next candle, it's going to be 53.65. Right in there seems to be resistance, which is interesting. That's 4 weeks in a row of down move as well. Despite that relatively shallow finish for the week, it was a pretty aggressive week on that Monday session. And then looking at it here on the daily chart, you can see that huge gap down, rallied into the end of the week. Trend line sitting right there as resistance. Momentum still looks okay. RSI still looks okay as a potential bull push here. And then looking at it on the S&Ps in terms of levels, 535.72 is my level. That's where we gapped to on this initial push from Thursday into Friday. Gapped right to that level and then fell. You can see the gap fill here, 9 EMA sitting there. If we do get a continuation, you have a short-term trend sitting up around that 538.97 area, right in the 539 area. That would be my next resistance here in the short term. Still seems like it's got some momentum into that daily based on this daily chart, but understanding that the weekly is still short-term bearish based on the momentum indicator. Moving over to the Tasty charts here for the SPY, you can see those 3 down moves. Got all the way down to that 34 EMA at 515. Got back above the ATR stop, which was 522.26. Still short-term bearish to me on that weekly chart, the same as we saw on the previous. Are we going to take out those ATR stops this week? Certainly seems possible. You can also see how those ATR bands are starting to bend to the downside. That is not a great indicator, and really you're seeing a flaring here, so volatility is widening as we see the ATR bands widening there, which means this could still roll a little bit bearish. And that lowest ATR band is sitting all the way down at 489.04. And if we did get down to that level, that would eclipse almost all of the gains for this year, taking us all the way back to the end of January timeframe. So something to consider. Definitely could roll there. Volume weighted MACD also showing bearishness with some certain levels. And then also you can see that 55 EMA at 495.98. So a couple of levels in there if we did take out that 34 EMA. And then looking at the daily chart, it makes sense that we did get a little bit of a bounce off that first candle, got back into the middle of this range here. We were definitely extended in the short term, but now we're here getting very close to that midline. The midline here is 543.47 right here, right on top of that 55-day moving average, right in that same zone at 538. And then you got the 21 and the 55 EMA hanging out here at 538.30. So a couple of levels of resistance, and you can also see those upper ATR bands definitely bending, and we are in bearish conditions still here on the daily chart. So still some indicators saying that bearishness is to come. Moving over to the NASDAQ here on the weekly, you can see that down week initially ended up 0.39. You can see the trend line was sitting there at 17,280. 55 EMA still down there at 17,117. We'll see if we end up going lower and touching those areas. That would have been 5 bear weeks in a row, but we ended up managing to stay just barely positive, retesting the trend line here. So critical zone, waiting to see if that trend line holds, if it's going to reject from there and push back to these lows, back down to the lows from mid-April, or if it's going to push, hold that trend, and then push up to this next one up around the 19,500 area. Interesting thesis here, critical zone, waiting to see which direction we get. And then moving over to the actual QQQ charts, you can see this trend line that marks the high from mid-July of last year, the bottom here from April, and then the bottom here from this most recent push. Touch that trend line, got a huge push on volume. Momentum is still bearish, so do consider that. We could see another bear week, but we hit that trend. That was a super important area. Caught a little bit of a bounce. Doesn't mean we're not going to continue down to that 55 EMA. If we did, that would be 416.80, and it was a very wide-ranging candle. From top to bottom, it was a 5% move, so we moved down 5% and then ended up just flat, so a 10% volatility week. Lots of volatility there. And then looking at the daily chart here, you can see the critical levels, 9 EMA, critical zone here at 450.40. Need that zone to hold. That's where we closed, almost to the penny. Daily momentum says this should continue to swing to that 21 EMA up at 465. And the max pain charts do also indicate we should head up into that zone. So that's where max pain is. We'll see if we get that continuation up into that area. Moving over to the Tasty charts, same thesis here. You can see that a couple of weeks of down move, big volume on that candle, almost hit the 55 just like the previous. Took out all the ATRs and that 34 EMA, ended up holding those levels on a closing basis. And we are just barely eclipsing the highs here from mid-March. So we'll see if we can hold that level. We'll see if we can push to that 8 EMA at 464.15 on the weekly chart, right in that same region, but understand that the momentum here on the volume weighted MACD is still technically rolling to the bear side. And then looking at that daily chart here, you can see the bigger move down, way extended, should have expected a bigger rally back into the middle of the range before we got that continuation lower, which I still think is going to happen. I think we're just going to get that bigger push here to the mid-range, get the max pain finish, and then we'll see what happens after that. So either way, still short-term bullish with that medium-term downtrend. Nothing changing here on the Tasty charts. Moving over to the Russell, you can see that down week 2 weeks ago, 6.8%, and then we got another 1.18%. Momentum still rolling to the bear side. Touched that 200. That's where we bounced last time on the down move. Did get a couple of weeks of bullish after that. We'll see if we get another continuation here. If we do, the next trend line's all the way up at 214, but it's got some levels to work through. We did hold that 21 EMA, started to reject a little bit from that 9 EMA at 208.05, and then you can see the level there, 208.22. So critical zone, 206.50, closed right there, almost to the penny, just 4 cents off of it. Then we'll see if we can get the candle break continuation or if it's going to reject from there. And then looking at it on the daily chart, it just doesn't look as bullish as the other major indices. Momentum is stepping to bullish, but RSI doesn't look nearly as good. Didn't test the 9 EMA at 210.43. And then again, that trend line sitting up there, 214. Just seems less likely that we're going to get there. And we couldn't hold these previous highs either or even get back above them after this slight push. So seems like we're in the middle of this range waiting again for some clear direction. Moving over to the Tasty charts here, you can see we're still in bullish conditions. Tested that 55 EMA just like we saw in the previous. Held that level. Looks like we're going to push at least to the 8 EMA at 209.50, which would give you about 1.5% higher. Momentum not really doing much of anything on the volume weighted MACD, and you can see we're right in the middle of this range, so nothing really changing there. And then looking at the daily chart, you can see we did hit that lower ATR band here on that first Monday. So we should have expected a little bit of a bounce, which is what we got over the next couple days. 8 EMA sitting there at 208.60. So again, expecting just a little bit more up move. We'll see what happens. And you can also see the volume weighted MACD got its first step to bullish on that Friday candle. So again, that indicates a little bit of short-term bullishness. Waiting to see what happens there, but understand we are in bearish conditions with the ATR stop all the way at 225.90. Moving over to the Dow, you can see we're still holding most of these gains. We're in this kind of chopping price action here. Held this lower trend line back into the middle of the range, waiting to see if we can push back to 398.76. If that level holds, maybe we can push up to that 414 area. So far, this trend has been holding. So you have a bottom, a top, a bottom, back to the top. We've now tested the bottom, waiting to see if we can get back to that top. Momentum says no. Volume says maybe. RSI is a little bit bearish there. But right now, you would expect this structure to continue to hold based on what we have. And then looking at it here on the daily chart, let's go ahead and extend that out just a little bit. You can see the 9 EMA in the middle of the range at 396.72, and then waiting to see that same level there, 398.76. And then if it can hold that level and push, there is 414 up there as a potential price target. I would argue it looks a little bit less likely this time because you do have a high and a slightly lower high here, which is not the same topping pattern that we have been seeing previously. Moving over to the equal weighted S&Ps, you can see we are in this same zone. So we had this pendant formation or the triangle formation. You can see we tried to break out through some wicks to the upside and then rejected. 2 down weeks. Now we're testing the middle of the range. If it rejects from here, that's going to indicate this is truly a topping pattern. RSI seems to be a little bit bearish. You can see huge volume over the last couple of weeks, which was the fake out, breakout, and sell off. So none of that points to bullish. Again, doesn't mean we can't get a couple of days of bullish and then get the rejection, but understand the weekly chart does not look super good to me. And then looking at it on the daily chart here, you can see that same thesis, breakout, topping pattern. It was a slightly higher high, but really this looks like a double top to me, especially on a closing basis. And then we had a clear breakdown, broke the midpoint, retesting that zone here now. And if it rejects from here, that's going to be a clear topping pattern. Momentum on the daily still says this could be okay, but the candle pattern definitely looks a little bit bearish. Moving over to the ratios, SPY, Russell, and NASDAQ SPY, you can see the SPY did continue to outperform, but not by much. Slight bullish candle, gapped a little bit, 21 EMA there. The step was towards bullish on the weekly chart, which is interesting. We'll see if we get more continuation here, but this is clearly a zone of resistance. 259 is an important level, marked several tops here back in November of last year, another one here in April, and then another one here in May. Held that level for a while, breakout, fake out, retesting. We'll see if it holds now. And then looking at the NASDAQ SPY, very little change. Let's go ahead and extend out this trend line here. Maybe we get a little bit more push, test that trend line, but still seems like the NASDAQ is going to underperform just a little bit over the medium term. In the short term, looks like we could get a slight continuation back up to that 55 EMA at 350. Moving over to SPY divided by the M2 money supply. This has been an important chart over the last several years. You can see that pre-COVID high, the most recent high in November of 21. And then you can see that clear breakout here where we've been on a run. Understand this 2205 level is super critical. Going back in history, the only time we've been above it for any length of time is the dot-com bubble. Rallied super aggressively, came back through there, and still have not held above it for any length of time. So just as a reminder, I still think this is bubble territory. I do think we're going to give this back at some point and push back below that 2205 area. And the question is this the actual top with a left shoulder head, right shoulder forming? If that happens, that is going to be disastrous. That would give us a lot of potential downside. Or is this just another down move in the trend with a higher low setup, and we're going to push to a higher high and further push out that pullback, which I still believe is coming eventually back to that critical zone of 2205. Moving over to the Mag 7, you can see very similar to the NASDAQ, finished up just 0.5%, came down to that 230.52 level, almost to the penny. Low of the week was 230.47, so just below it by about 5 cents. Momentum still bearish, RSI still well below the SMA, so could see that medium-term downtrend, but that doesn't mean we can't get a little bit more push here, establish that lower high, high and then see what happens after that. And then looking at it on the daily chart, pretty much the same as everything else, pushing for that 21 EMA at 260.25, and then we'll see what happens from there. Is that the lower high? Are we going to push past that up to the trend around 271? Then we'll see something kick in from there. Momentum says this is bullish, so we should still see a couple more days of upside, and then we'll see what happens after that. Moving over to Apple and Microsoft, here you can see Apple holding up quite well, 1.65 to the downside. Momentum still rolling to bearish, still good volume. RSI still bearish, so not as good as you would have hoped. On the daily chart, some of the days did outperform. You can see we did get down to that 21 EMA at 196.45, held that level and pushed back up. You got trend resistance at 220. Still thinking we could potentially get there. And then we'll see what happens. Is this the first higher low on this push? And we're going to see higher highs to come. Potentially, certainly a possibility, but we need to see some of these levels break. 217.65 is the first one, and then trend resistance after that. And then Microsoft actually hanging in there a little bit better than I thought it was based on the daily movements. 0.6 on the week, momentum bearish, RSI still very bearish. Hit the 55 EMA all the way down at 387.22. We'll see if it breaks down to the highly traded zone down around 373. That would be your next price target down around this zone here, this consolidation back from November and December. This still looks like a consolidation pattern. Wyckoff distribution, consolidation here, breakout, fake out, rejection, testing the bottom here, then consolidation, and then we'll eventually get that bigger breakdown. So still does not look like a good pattern for me on Microsoft. Apple honestly seems like it has more potential for a rally in it. Moving over to Tesla and NVIDIA. Tesla down 3.69, NVIDIA 2.35. 5 weeks in a row of bearish, momentum stepping to bearish, RSI breaking down here. We're back into this consolidation on the low of that candle, touch the highly traded zone. Then we'll see what happens. Are we going to establish that lower high and move down? Still seems like a potential. This was a solid base. We did get a move higher. Maybe there's some little bit more gas in the tank. Hard to say right now. Still needs to fill the gap, so that's a little bit weak. 214 would be your next level after that. Again, still seems like there could be a little bit of push on the short term. And then looking at NVIDIA, this is the weakest that we've seen this in a long time. We've been going basically straight up for a while. We had some sideways consolidation from July of 23 all the way until October of 23, but it was really sideways, held those lows, and then we pushed. And now you can see we have a clear breakdown of structure, broke this previous low on the low of that candle, needed to hold the 95.74 area, didn't do it, broke that level. Now we're going to see what happens. Is this going to be a topping pattern where you get a lower high setup, push up to like 125 or so, have that lower high, and then we see a bigger roll down, maybe to that 55 EMA, all the way down at 73.35. That would basically cut the stock in half from top to bottom. The high was from the 17 June week, and if we did pull back down to that level, it's about 47% from top to bottom, so pretty close to a cut in half, and then I think there's going to be some buyers waiting in that zone. You can also see that low from 15 April week right in that same area. 75.83 is the zone. Moving over to Meta and Amazon. Meta has been the outperformer, up 6% on the week. Absolutely insane. 520.31 was the price target. Trend line next one at 544.55, which is basically right at these all-time highs. Meta looks very strong here in this consolidation. And then Amazon down 0.5% after breaking a bunch of levels. Didn't quite touch the trend line here like I thought it was going to, but it's right at the level. 167.06, almost to the penny. We'll see if we can get a little bit more push here. It is short-term bearish. That 9 EMA is going to cross the 21 here very soon. Clear topping pattern, clearly rolling to the bear side. We'll get that consolidation as we wait for these EMAs to consolidate, and then we'll see a bigger breakdown in my opinion. Moving over to staples and discretionaries here, you can see staples was basically flat, 0.14. To the downside, momentum still technically bullish. Volume coming in pretty solid at 77.50. Looks like we're still going to push to 79.90. Still in the same trend, no real changes here. And then looking at discretionaries, this looks quite awful. Took out the lows from this consolidation, hit the 200. Again, you would expect rejection here around that 180.10 level if we even get to there. Based on the overall thesis of a short-term push, 180.10 would be the zone, and then we'll get that bigger breakdown from there. Maybe make it as high as 185, but again, this still looks like distribution. Consolidation, tried to break out, couldn't do it, broke down. We'll get a buyout, and then we'll see that bigger move down in my opinion. So we'll see how it plays, but that's what I'm looking for over the medium term right now. Moving over to oil and gas and financials. Oil and gas did come down to a level 127.99, almost to the penny. Touched that level and bounced, stayed positive on the week, 125. That puts you right back to the lows from that January. That was what we thought was going to happen once that 140 broke. That's the low. Touched that low, got a bounce. 135.07 is the level right now, 144 EMA. If that zone holds, could see a push back up to 140. Obviously, right now, recession is the risk. If there is recessionary effects, that's going to give us reduced oil and gas demand, which could pull down on these stocks. Either way, still a little bit better place to be than growth. And then looking at financials, also positive on the week, 0.81. And then looking at potential levels here, you have this trend resistance. That's going to be sitting up around that 44 area if we do get another very strong push. Volume was very powerful on the week, but a lot of that volume came early in the week. As we rallied into the end of the week, we didn't see that same volume coming through. And you can see that here on the daily chart. Huge volume early in the week on the Monday on the down move. Got subsequent bull candles and that volume was fading. So that could potentially indicate that this is going to fail, which does fit with my overall thesis of a lower high, just a couple of days of push and then a lower low to come. Moving over to commodities here with oil and gold. You can see oil touched that 73 level, touched it 2 weeks ago. Overthrew it this week, turned a pretty solid week at 4.5% up. Momentum swinging to bullish. Seems like this is going to push a little bit harder here. Trend line at 78, and then you can see the highly traded zone there. If this zone breaks here, we're probably pushing back up to the 81 area, and then you got trend just behind that, around 81.72. So this seems like we're going to get there. Solid bottom. Could certainly reject from this zone here, but it does seem to have a really solid push. Inside candle, indicating some more bullishness to come. And then gold, slightly negative, 0.35, but it's holding right at this level. It's been holding these higher lows. The trend still is intact. And if we get another push, that should push us above this previous 225.09, close above it, and then we're off to the races, in my opinion. Gold looking really solid on the weekly chart. Moving over to Breadth. Breadth was negative on 20-day. Momentum still bearish. RSI still bearish. So wasn't the full recovery on 20-day Breadth, still indicating that we could see a little bit of a rally to 51.75, retest that area and then break down. That is 4 bearish weeks in a row, and that trend continues. Momentum stepping to bearish, like I mentioned. So 36.60 is the next level, and then if we break that area, probably should add some levels here. Seems like this 27.30 area is important as well. Touch that a couple of times here through mid-June. Touch that a couple of levels here as well in May of 23. So let's go ahead and add that level right in there at 28.21, which is the low from 15 May. So interesting zone there. If this 36 area breaks, I think we could get into that zone. And that's a pretty good level as well. You can see it here in January of this year, touched that zone and then rallied. Interesting area. Still think there's more bearish to come there. And then looking at 50-day Breadth, you can see it did manage to stay positive after wicking these previous lows. Again, you could argue for just a couple of days of push, establish that lower high, and then see what happens. Momentum still bearish, RSI hanging in there just barely, but we'll see how it plays going into next week. Moving over to 200-day Breadth, looks very different than the other two. Negative on the week, 3.46. Got down to the 200, took out all these other wicks with that wick that we got this week. And then looking at it a little bit closer, it did hang in there, but this looks like a hanging man candle. I think it's going to continue lower. Momentum bearish, RSI bearish. And this is continuing this downtrend with lower highs and lower lows. I think we're going to get one on a closing basis as well. Eventually this will break down, but it can take a long time. We've talked about it many times. Breadth peaked in April of 21. Markets didn't peak here until November, December, and we had many, many weeks of fading breadth while markets were going higher. And this could be another iteration of that. Many, many weeks from January to current, with markets hanging in there pretty well, and then eventually this is going to fracture, in my opinion. Moving over to the dollar here on the weekly chart, you can see we got a wick rejection just like everything else. Went all the way down to these trend lines here at 102.12. Momentum still bearish, RSI still bearish. Seems like this is going to continue lower. It is still reacting to that potential of a recession, so weaker economy says weaker dollar. It did hold these levels on a closing basis, but it is definitely concerning, and I do think that this is potentially going to go lower. It's been moving in the same direction as equities, which again means that everything should be going lower. But we'll see how it plays. Doesn't mean it can't get a little bit of a bounce off of that wick rejection. Lower high setup and then a bigger move down. Medium term is still very much bearish with a low, much lower low, and you can see high, lower high, bigger breakdown. So everything still makes sense structurally to be more downside on the dollar. Then moving over to yields here on the 2-year and the 10-year. 2-year up 4.45, 10-year 3.95. And looking at the structure, we're at a point of resistance. I still think the 2-year is going to move lower, especially once we get closer to that September meeting. It's going to price in some of these cuts. Still well below this previous low here from January, and I do think it'll continue to stay below that, whereas the 10-year is above that low from December, and I do think that this will maintain this area here between 3.97 and maybe 4.25, at least for the short term, whereas the 10-year is going to trend down to that 3.66 area, eventually giving us that more normalized condition with the 2-year well below the 10-year, and that is when you should be pretty cautious in markets, in my opinion. Historically, that is when markets tend to get bad, when we get that re-steepening. Moving over to bonds here, you can see J&K up 0.27, TLT down 2%. Structurally, I still like TLT much better. This is an upward move here, and we did get a pretty solid bounce on the Friday. I think this is going to continue to push towards that $100 level. Momentum bullish, RSI bullish. We did see really heavy volume on the Monday, 363 million shares traded this week, and we didn't quite touch that level. We did get into this zone here back from December. I think at the very least we're going to see this top eclipsed, and then we'll see what happens from there. Overall, this is a lower high, a low, higher low setup, and I think we're going to get to at least a double top, if not a higher high. Got the 144 sitting up there at 106.90. That could start to be a magnet, pull us up to here, and then we can start this medium-term uptrend. I still think that that is potentially in the cards, whereas J&K has not really shown any kind of structure. 144 EMA is in this zone now, but we're still in the same consolidation that we've been in since December of last year. Moving over to volatility, what a week. The high of the week was a 65.73, massive spike, but it ended up negative, down 13%. We're right in the zone of support. This is what we've been talking about. This zone needs to hold if it's going to do it. Otherwise, we're probably pushing back down to the 14 area. So critical zone, again, Monday, Tuesday, definitely going to be interesting. Momentum still bullish. RSI seems like we're going to establish that higher low. Again, could hold here and push, could pull back, higher low setup and push. Either way, I think we're going to get at least 1 or 2 more spikes. And who knows where we could go at this point. We've already seen a 65 on the VIX. Definitely not something I was anticipating this week. Moving over to my accounts, you can see I am postured slightly for a little bit of bullishness on the Monday. Still well protected at 204 for the covered call at 206, giving me a max profit of about 50 cents higher from here. Again, I think it could go either way, but looking for just a little bit of bullishness. And then similarly here on the Qs, 449 is the position for 380 credit. A little bit more bullish here as we go into the Monday. Either way, I think we should see at least 1 step higher, and then we'll see what happens. Overall, terrible week of trading. Definitely got off kilter, and hopefully we have a better week this upcoming week. Let me know down in the comments what you think of the Sahm Rule. Is it going to be accurate yet again, or are we just going to be a little bit early like we were in the case of that one so-called false positive? It seems like eventually it's going to happen, but still let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.